Welcome to Tesla Stock Daily Drive. I'm Dusty, your host, here to guide you through the week's stock market journey with calm and insight. Today, we're focusing on Tesla's performance from May 11th to May 15th, 2026. So, buckle up as we navigate the highs and lows of one of the most talked about stocks on the market. Let's start with a quick market overview. This week, we witnessed a rather turbulent ride for Tesla shares. Opening at $445 on Monday and closing at $422.24 by Friday, Tesla saw a decline of about 5.1%. This fluctuation reflects the broader dynamics at play within the technology sector, influenced by enthusiasm for artificial intelligence, inflation data, and geopolitical tensions. Monday was a bright spot for Tesla. Shares surged nearly 4%, closing at $445. It was the largest one-day gain in over a month and was driven by optimism across the tech sector, particularly among semiconductor stocks. Nvidia and other chip makers helped push the S&P 500 and Nasdaq to record intraday highs, even as investors navigated rising oil prices and tensions in the Middle East. The optimism was short-lived, however. On Tuesday, momentum reversed. Tesla fell 2.6%, closing at $433.45. This drop came amid a broader pullback in technology stocks as investors awaited key inflation data. Rising prices and the fading hope for a U.S.-Iran ceasefire led to profit-taking, impacting the tech-heavy Nasdaq in particular. By Wednesday, Tesla rebounded, closing at $445.27 as markets digested strong inflation data without losing sight of long-term AI demand. Chip stocks continued to rally, pushing the S&P 500 and Nasdaq back toward their highs. The move was seen as a rotation back into growth stocks, with investors looking ahead to the Federal Reserve's policy decision. Thursday was relatively uneventful for Tesla, dipping slightly to close at $443.30. As the market anticipated a significant U.S.-China summit in Beijing, semiconductor stocks kept climbing. But some modest profit-taking in AI plays like Tesla cooled the momentum. Friday brought the week's most significant drop, 4.75% to $422.24. This decline was fueled by surging oil prices due to stalled U.S.-Iran talks and rising Treasury yields, which stoked inflation fears. The resulting sell-off hit energy-sensitive and technology sectors hard, pulling the S&P 500 and Nasdaq off their record highs. To wrap things up, Tesla shares underperformed the broader market this week, largely due to shifting investor sentiment. We saw the stock buoyed by AI optimism at the beginning, only to be pulled down by inflation and geopolitical uncertainties. With the Federal Reserve meeting next week, the landscape for Tesla and the overall market remains uncertain. Tesla's journey will likely continue to mirror the broader tug-of-war between growth-driven rallies and macroeconomic pressures. As always, investing requires a careful eye and thoughtful strategy. Stay informed, diversify your portfolio, and keep one foot in the present while planning for the future. That's the way to weather any storm in the financial markets. Thank you for joining me today on Tesla Stock Daily Drive. Remember, when the dust settles, only the truth remains. Until next time, this is Dusty, signing off.